Hey guys, how are we all doing? Welcome back to another episode of Market Mastery. You're with your host, Trader Dax. And I just wanted to do this video because I think the market is in a really interesting spot at the moment. And it's actually very difficult to trade right now, in my opinion. It's probably some of the hardest trading conditions that we've seen in a long time across the crypto markets, that is for sure. And it's mainly because of everything that's going on in the global economy and how that impacts the stock market and things like that. So, we're going to cover all that. We're going to look at Bitcoin. We're going to look at Ethereum. We're going to look at a couple of alts like Solana. And then we're going to look at things like the DXY, US 10-year bonds, Nasdaq, S&P 500, and wrap it up and bring it all together to hopefully give you guys some good levels to watch out for and some key pointers to really watch over the next week, because I think this is going to be quite a big week. If X happens, how we can react to that by taking action on it, and just the main things that I'm watching and looking for. So let's get started. Okay, so at the moment, we're just looking at the Bitcoin chart right here. And we are seeing a fair bit of reaction to this daily order block, which is this daily here, which I thought was going to be the top of the range for some time, and was sort of expecting us to get stuck sideways in here for a little bit longer than we actually have been. It managed to break out of that, get back below it, and then thanks to FOMC, we pushed back above that, and now we're bouncing off that, and it's holding. So that's a really strong sign, because this is obviously just your basic support and resistance flip of a daily order block, right? So resistance here, broke through, sort of whatever happened in here. I thought we were going to just capitulate from here and sweep this low or something like that. And that probably was going to happen until, we had, the stock market mooned and crypto sort of took off with that. And now, there's sort of been a bit of a flip in the opinion in the direction of the market. And everyone seems to be getting more and more bullish, which could be a bit of a danger sign considering the time and place we are in the bear market. But we'll touch on that a little bit later. But at the moment, this could continue up and maybe even test up to 28K, right? I think this is probably the major level that we need to keep our eyes on. This 28.5 sort of resistance level through here, right? This other line that I've got is, sort of the range low from, back over last year, 2021, and, the end of 2020. Oh, no, sorry, that's January 2021, right? So, that's sort of like the higher time frame, range. So, I mean, basically the thing that we need to be watching for here on the really, really high time frame is this could just be a big range from 30K all the way up to 60K, right? And so we had the deviation above range high here, and that's resulted in a collapse to range low. And then we had capitulation event, which is sort of caused by, the huge collapse of 3 Arrows Capital and then Celsius as well going under, and all that drama and everything like that happened in there. Panic selling, liquidations forced, selling of a lot of Bitcoin sort of pushed us, all the way down to pretty much 18K, right? Is that the ultimate low? It's pretty hard for me to say that. A lot of people have been asking. To be honest with you guys, I just absolutely do not know if this is a low. There is potential for that to be a low because the cycle low, I mean, is in like for the 4-year cycle. There is a strong argument that could be the low, because it was the price only went down there because it was forced down there due to the mass capitulation and forced selling of 3AC and Celsius, right? So maybe we would have never actually gone below the previous all-time highs of 20K if that never had happened. And the only reason why I went down that low was because of all the forced selling, right? That is a theory, right? And it's fair enough to sort of be believing that. But, for me, I'm not 100% sold on that. I'm aware of the situation and it could be a possibility, but I'm also, focusing on the broader picture as well. And one of the things that, you cannot ignore is that this price action, yes, we have been making higher highs, and that could be because, the forced selling pushed us way too low than what we should have gone. But then, if you just look at the basic structure of this, it's really hard to ignore that this could just be a rising wedge, right? It really could just be, your basic rising wedge here, getting ready to, roll over eventually, something like this, and make a new low, right? It's really hard to tell if this will make new lows or not. But if the stock market does capitulate, I could see something like this. Maybe we sweep this low, we have mass panic in the market, everyone freaks out, expect we're going to 14K, and maybe we bounce off like 16.8 or something, which is this high up here, which was the first sort of rebound level, the second highest level after the top had been put in, right? So it's pretty much like 6.8 or 17 flat. I think if you look on the weekly time frame, it's like 6.8. You take it from the daily level. So I'll just quickly show you guys that. Yeah, so if you take it from like the wick here, obviously it's going to be a tiny bit higher, but yeah, it's actually 6.2 on the weekly. So maybe we'll just mark both of them in, as it could get. You could see some action around that area there. And, we also have seen the market react to that just before we broke out of 20K. You can see perfect close here, came down with it there, right? So there is a little bit of action in this area to be aware of. So maybe that could be an ultimate bottom for a final capitulation shakeout. Everyone freaks out. You get some nice wicks down here, close back above here, and then reverse. So I'd be looking for the candle would look like a big square like that, right? And then have a nice tail down here. And that's the sort of thing that I would love to be getting in on with, a lot of confidence for, potential longer term bottom. But sometimes it's not that easy. You don't get a really obvious candle, and sometimes it can be trickier getting into the bottom, right? Now, there's that argument that could be the rising wedge we're getting ready to break down, right? So what do we need to look for? And the major thing would be losing this daily order block that has been defended over the last week pretty nicely, right? So capitulation below that, something like this candle that we got here, I don't want to see something like that. That would be pretty nasty. And then also, then the rising wedge sort of trigger is going to play out as well. And there'll be a lot of people shorting that. So that could be a really nice short entry, actually, for those who are more bearish on the market, to get in somewhere like here, or even just to close below that level, right? And then we hope that there's not some, economic factor or something like that. Jerome Powell doesn't come out and start talking about lowering rates or something crazy, or pause earlier like he did back here during FOMC, and we just launch back up. That's if you're in shorts anyway, right? That's not what you want to see. If you're in longs and we break down through here and get back above this level, I think that's, it's just showing that this level the range high is being defended by the bulls. So it's obviously a bullish sign. So, the other thing as well to take note of is the 200 weekly, right? If I go and put the 200 on, 1 second. When we go out to the weekly, I've just got that marked in there with that red line. So it's actually gone up. So this is basically how I set it, right? I had it set obviously for here for last week. Now it's gone up a little bit. The price has been bouncing off that over the last week. And obviously it moves each week, so you need to reset it, right? So now we've got it set because we just clicked over to the new week half an hour ago. So yeah. It's not going to show because Binance doesn't have the history. Maybe we can go back on another chart. Right, the index. This one will work. Right, so we go out to the weekly time frame. We can look at this 200 weekly, and we can see how price has consistently bounced off this level, right? So the 200 weekly, ever since, it sort of became possible to record after 200 weeks to get the average, right? Bitcoin has not really traded below it at all. This is the first time ever that Bitcoin has really opened and closed multiple weeklies below it, right? And we haven't really spent that much time below it. And at the moment, we're sort of holding above it. Now, in saying that, we're holding above it at the moment, has been getting defended over the last couple of weeks. we don't want to see it break back down below that, right? So we've sort of got that daily order block in here. We've got the 200 that's really important that we want to see price being held above for continuation to the upside. Now, losing those both trigger people to start taking profit on long positions and also trigger people to start taking short positions as well, because they, either covering for spot long positions or they're expecting the market to go down and they're trying to profit off it. So they're acting on that, right? So those are probably the two major things for me at the moment to be watching for. And then obviously in alignment with the stock market, because whatever the stock market does, Bitcoin is going to follow. And at the moment, if we look at the S&P 500, I'm not really loving, this is a pretty nice daily level through here. This whole area, right, is basically a zone of resistance. And we're coming up into here and had a fair amount of selling. There's a lot of people who have been shorting this level, came up and probably took out a fair few people that got short through here. Now we're sort of rolling over again. On the daily time frame, we've got a daily bear div at the top of the RSI. Our cipher indicator is giving us a sell signal on the daily, which usually isn't really a good indication for more upside after quite an extended rally. It's a 12% rally over the last 50 days that we've had. So wouldn't be surprised if we did see this pull back. How deep does it go? That's a tough one, because when the stock market starts trending up, the pullbacks can be very, very shallow, as we saw over the last couple of years, right? But have we gone back into that grind uptrend just yet? That is yet to be seen. I think we're going to find out soon if it's still, going to play out with sort of bear market, big swings to the downside, or if, this is just going to be a little chop sideways and then rally again, right? And that'll give us a really good indication of, how we can expect crypto to continue to trade, because when the stock market has these big sell-offs, like if we did something like this again, and came back to this weekly resistance level or further down, we can almost guarantee that crypto and Bitcoin is going to be pushing back down towards, this 20K level to test the previous lows, previous all-time high, or the test of previous lows, in that price action that we were talking about back here that would trigger, for me, that's like the best thing that I can sort of look for and hope for, is to that delineation below the lows, right? And then come back above, and, the entry is on that retest right there. You can always buy it as it comes back in, because sometimes it just takes off as well. But I like to get a little bit of a pullback is usually the best entries that you can get, right? And then your stop loss just goes below the range low. And that for me is the best entry that we could hope for here for a long-term upswing position. But that might not come. So we need to be prepared for that as well. Right. So what I was talking about before, I don't think I finished off my thoughts on that because we started talking about other things. But, we had the deviation above range high, right? And now came back to range low. Now this might just be the deviation below the range low of this 30K. So I try to look at everything as like different types of ranges, right? And, you could probably make the argument that this is the mid-range through here, right? So range high, right? This could be the range low, right? And this could just chop around, maybe one more swing low and then come back into here. That's the sort of spot where I'd be very, very excited about crypto moving forward. So, a lot of people asking me questions about when I'd be super confident we're going into a new bull market, et cetera, et cetera. A reclaim of this 30, to be really clear on a weekly level, you might even want to see a weekly close above 31.600, right? Which is like this level up here. Like down here is more of like a daily level, right? So, but hopefully that gives you an explanation of like what I'm sort of thinking about for long term. And, that reclaim of this 30K level, I would expect price to move up to 47, 48, chop around for a little bit, and then, have a push eventually up to, this 65 sort of area to test the range highs again, right? So that's just like basic range theory. We talk about that stuff all the time. And it would look really nice for a long-term chart. And for some reason, it always ends up playing out for like a really nice, larger to higher time frame picture, right? We've seen that with this big bull flag back here. So let's end up seeing how this ends up playing out. But that's the main thing that I'm looking for the long term is a reclaim of this 30K, right? Other things to take note of right now at the moment, obviously the SPX 500 looks like it is rounding out, like we just talked about. But come and take a look at the Nasdaq as well, which has come up to this long-term downtrend. So this is a really important downtrend to have on your chart, guys. So just connect like the top here, the very highs, to the first rally through here. And as you can see, we're coming up, put it in a pretty bearish daily at the end of last week. And this sort of looks like it wants to sell off a little bit as well. All our momentum indicators are sort of topping out, indicating that it could be ready for a pullback, right? So wouldn't be surprised if we see some selling. On the 10th of August, we have a really important economic date as well, because we have new CPI data coming out, right? That could be high again, and that could actually cause a bit of scare in the market and cause some selling pressure, because if we do have high CPI again, last time was 9.1, before that was 8.6, 8.3 before that, 8.6 before that, then it was 8.3 again before that, right? So we haven't topped out yet with inflation. That could cause a bit of a scare in the market, because we had big jobs numbers come out on Friday and that caused initial sell-off. And since then, other thing to keep your eye on is the bond market, because bonds actually, you can see the 10-year bonds took a big jump when that happened, right? Almost instantly jumped 6% and up 13% since, right? The 2-year as well is almost back to its previous highs of this rally. You can see it's just been absolutely launching up almost 20%. The 2-year bonds are up almost 20%. That's since the other day when the jobs market data came out, right? So interesting to see this sort of play out, because the more the interest rates go up, basically for the bonds, when the bonds yields go up, interest rates go up, that's going to put more downwards pressure on the stock market. So maybe expecting that the end of the bear market, we could be a little bit early here. At least that's what the bond market is telling us, because the economy is still too hot. And when the economy is still too hot, that means that as we saw with the job reports, and inflation is still at 9.1, right? So very important what comes out on Wednesday. If the economy is still too hot, job market's still too strong, that means we're not getting that demand destruction. So that the Federal Reserve is going to have to continue to raise interest rates probably more aggressively than what the market might have been thinking through here, because we sort of put in those high inflation numbers, and the market just took off, being like, okay, 9.1, all the commodities have come down, lumber's come down, gas has come down, petrol's come down, oil's come down, corn's come down, wheat's come down, everything's come down, and this has got to be the top of inflation. What happens if it's not, right? So that's the sort of thing. There's going to be a bit of, I think some volatility and a lot of uncertainty in the market leading into Wednesday. And usually when there's that uncertainty in the market, that causes selling, especially after, quite a strong rally that we've seen, right? From bottom to top here, it's been 50 days. Sorry, it's been a 20% rally. The Nasdaq is still down 21%. So, bear market territory. The S&P 500 is only actually down 14%, 14.2% from its all-time high. I don't know. For me, I just feel like that's not enough pain, for the demand destruction to come into the economy that the Fed wants to see to really slow down that inflation. So, things to watch out for. I think, there's a very strong chance that we end up getting, a really nice head and shoulders bottom here on the stock market, right? Maybe that's the play that ends up playing out. So that's something to watch for sure. All right, just close Discord there. Right, that could be a really nice picturesque, easy one for retail to get on to push it up higher. But I don't know, let's see how this ends up playing out. We easily could do this and come back to the previous all-time high from before the COVID dump. And then, the Fed sort of starts to pause when we get down there. And that sort of lines up a little bit more with previous bear markets and the way that they sort of play out, we have a big bear market rally. Everyone thinks it's over. And then, a few bad things happen because in bear markets, you get bad updates, you get bad economic updates, things go wrong. And then that causes the next wave down, right? So let's see how this plays out. If this starts to push higher, you're safe in your long, safe holding spot. If this starts to roll down, it looks like we're putting a top here, which there's very strong potential right now that this is topping out at the moment. Obviously need to be looking to take care of positions and not have too much exposure, right? On Bitcoin specifically at the moment, this is more of a low time frame chart with a lot more lines on it. We are sort of painting this inverse head and shoulders picture here at the moment. So a break above 23,500, I think is going to be quite bullish for the market in general and push up. But can that happen, right? And so then obviously there's the counter trade, the inverse head and shoulders, which is if we come up here and then we fail here, right? And then we would want to be shorting that. So it's not so much about, me being here trying to be like, okay, guys, this is what the market's going to do, right? It's more about we watch, see the levels that get broken, see the levels that hold, see the patterns and things like that get rejected. And, we work out, okay, who's going to be offside here? Who's going to be stuck? Who's going to be a forced seller of a position here, whether it's a forced seller of a short or forced seller of a long, right? And then, we can sort of trade and take advantage of that. So if this breaks out and just starts to push, beautiful. All right. Any longs that got in this position here can hold those and look to take profit later, right? If this breaks out here and then reclaims this level, right, and we start to open and close underneath here, the neckline, obviously that's going to be bad, accompanied with stock market rolling over, Nasdaq rolling over, bond yields continuing to moon, right? This is actually down on the open, but obviously was pushing into the end of last week. Let's see what it does tomorrow when the market's actually open. But, those are all the sort of things that we've got to be keeping our eye on at the moment, and just constantly, adding the picture together. So it's a lot of things. You can't just look at the Bitcoin chart and the Ethereum chart anymore. And okay, Ethereum is breaking out, Bitcoin's going to launch. I mean, obviously there is a little bit of that in play, but the market, I think, is much more complex than it ever has been before right now. And it's going to be like that for a little bit longer. So unfortunately, we're just going to have to suck it up as traders that are participating in this market and get used to it. Now, the other major level that I'm watching for is the largest outside downtrend line. So if you take a line from the very top and put on the highest the first rally through here, you'll get this line through here, right? And we're sort of pushing towards that at the moment, right? So we might just chop around. A breakout from that level is usually quite a bullish signal that we're moving back towards bull market sort of territory. So I wouldn't mind seeing like a breakdown from here, right? This inverse head and shoulders, gets faked out or rejected, fails. We get some selling off here. Maybe the rising wedge plays out, chop around through here for a little bit, come back to 20K, then we rally through here, get back above the 200 weekly moving average, and then we start to push up more aggressively. And that would be, I think, adding a lot of strength and confidence to the market that we're moving back into a new into a new more bullish market ever anyway, and a recovery, right? And the main thing here that wherever this top ends up being, right, of this first rally, a break above that top is obviously going to be really bullish. So this could just be like a top through here, right? And then a reclaim of that level. So that could be, breakout through here and then a reclaim to the upside of say like 24K. That could be a really good indicator that we're moving back into a stronger and more bullish market. If you don't want to be getting in, trying to, get in around the lows here, for me, I'd be looking for whatever this top level ends up being around, wherever this first daily push is from, a reclaim of that level would be a really strong indication to load back up into spot positions for me. All right. Ethereum, is in a really tough spot at the moment because, we're in just bearish retest territory. So this level through here, right, is sort of like, if, you're looking at Wyckoff theory, you're looking at like, preliminary support sort of areas, right? This would be selling climax. This could be automatic rally, right? Maybe, this was just the whole range through here and we've already moved on. So hard to tell at the moment because, if this is going to be a really long accumulation range, what we had over the last accumulation range for Ethereum when it went on for like 2 years, right? You can see how long this accumulation went on for. You really need to go into higher timeframes to look at it properly, right? But if we're going to have something like that, through here, maybe this is just the beginning of, this is the selling climax, automatic rally, preliminary support. This is going to range through here for, the next, maybe until the next halving, right? Like sort of what it did back here. Ethereum didn't really take off until after the halving. So the halving was around here sometime, I think it was in 6th of June or 15th of June or something, right? So Ethereum last cycle stayed in its accumulation phase until the halving. That might not happen this time because of everything that's happening with the merge. Maybe it breaks out and goes into a bull market before Bitcoin. But at the moment, sorry for ETH bulls, we are at resistance and putting in a bearish retest at the moment. What would be bullish is a flip of this and holding above that level, right? And then the same thing, a break of this major downtrend level, right? So, you might see that I've got this downtrend level on my stock market charts, right? It should be on here, but sometimes, sometimes TradingView just removes your lines for you if you don't save it properly. That's sort of level through there, right? I'm watching for the stock market, for S&P 500 anyway. Right, and then obviously we're at it at the moment on the Nasdaq, right? So a break of these levels, right? It's the same as when we broke the level, right? We were sort of watching through here, right? We broke this level through here, and that was sort of like a really big trigger for us, depending on how you drew it. If it was that one or that one, right? Both sort of broke around the same time. It was sort of like a big trigger for us. Okay, we really have to get out of our Bitcoin positions now because, the Nasdaq and the S&P 500 just broken through their major, multi-year uptrend lines, right? It's the same sort of thing here. If we break through, this downtrend line, which I don't think is going to happen on the first try, although it could, so I need to be aware of it and watching it. If we break through that, everything goes back to being rosy and gold, inflation starts coming down, stuff like that. They start talking about lowering interest rates, they'll talk about pausing first, eventually going to QE, focusing on the economy and job market instead of inflation, all that sort of stuff. We're going into an uptrend. It'll be really nice and rosy, and crypto will just go back to doing its thing and being a little bit more independent, right? But until that happens, we're sort of going to be opened up to the fluctuations of these sell-offs, and it's going to drag crypto down with it. So a break of this downtrend resistance line is going to be really bullish for crypto moving forward. So that's a major level that we want to be watching for. And obviously we want to be watching it for on Ethereum and on Bitcoin as well. So pretty important, the macro downtrend line to be watching. All right. So Solana's the other one. I mean, it's hard because this just looks like a rising wedge. It's pretty hard to debate that. But, at the moment, we're still in the middle of the wedge. So, basic pattern theory, you have to remember that it's not a rising wedge until it breaks below this level, right? So that's the trigger. Then when it actually becomes a rising wedge and you play it to the downside, right? Because this can always just invalidate the downside. It's like a 70% chance it's going to roll over, right? And to the downside. So there's still that 30% chance, which, is more than 1 in 4, right? Because that's 25%, 1 in 4. So it's a little bit higher than that. We're going to move to the upside here, right? So breakout above, 48.50, right, would be pretty bullish. And then, you'd be looking for targets about 77. So that's the sort of way I'm just playing Solana at the moment. It would be a really nice short if, everything turns to shit over the next couple of, with the coming week. If everything starts collapsing on the stock market, this will be a nice short back to the downside, possibly down to 17. If everything turns rosy over the next couple of weeks, we don't have that downside in the stock market and cryptos, Bitcoin, etc. This is probably going to run up to test this level here. There would just be a bearish retest. This is basically where Ethereum is at the moment. So a little bit of bullish, fundamentals or something happens with, maybe Solana mobile starts picking up. Sam starts putting out some stuff that gets, the community or traders excited. And this can easily quickly come back up to 80, right? Maybe even if we come back down. something like that after we come out of the bear market. That'll be a key level to watch for. So that's pretty much it, guys. For me at the moment, the major things to watch for, right? You don't want to see these bonds pushing aggressively higher, right? It's really not a good sign. So keep our eyes on those, because if this, the 10-year bonds start pushing up to like 3.2 again, the stock market's going to roll over, right? So keep your eye on that. Keep watching the Nasdaq. Are we going to get out of this downtrend, or are we going to reclaim basically 12.20, right? So 12.920 or 13, right? Right, 1300 to the downside, something like that, right? Can easily play out. That's going to drag down Bitcoin and Ethereum with it, right? And then we'll start to look for, maybe re-entries around 20K, or potentially a sweep of these lows down here. So that's pretty much what I'm looking for at the moment. Hopefully that all makes sense. Tried to break it down as basic as possible, and also give you guys more of a higher time frame outlook as well. So thanks a lot for tuning in, guys, and we'll chat to you all soon in the next episode. Please leave a like and subscribe if you got good content from today's video. Cheers.